Hey traders, it's John Fortune here of this week's Weekly Forex Forecast for the 21st to the 25th of September 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index. Now, last week we highlighted the fact we did make a new high in the dollar index, and this spelt the end of the recent down move in the dollar, at least for the time being. We're looking now for this to go into a pause, and this is what we highlighted last week. We started in this area, and we pretty much, this was where we finished last week. You can see we went nowhere. We had a very low volatility week, and as a result of this lack of volatility, we do go into next week once again with a neutral bias on the dollar index. This continuation in the dollar index, this sideways move, could drift along for the next week or so. And so what this means is we're going to be looking at the individual charts on their own merit without a strong bias in the dollar one way or the other. And what last week showed was when the US dollar is neutral as opposed to being bearish or bullish, we can see some currencies appreciating against the dollar. Like last week we had New Zealand dollar rising to the upside, but at the same time we had US dollar yen selling off. And that tends to be what you see when the dollar index or the dollar itself is neutral. So we go into next week, once again, as I said, with a neutral bias on the dollar index, and we'll be trading the individual charts on their own merit without a strong bias in the dollar one way or the other. So the next market we're going to look at is crude oil. Now, last week we were looking for a pullback in crude oil to look for short positions down to the 34.35. We did start to pull back towards the 42.63, and we had a little bit of a deeper pullback than expected. However, this is better because it does give us the opportunity to get better risk to reward setups down towards the 34.35 than if we were to short from over in this area, for example. So very simply put, going into this week, now we've had this correction in crude oil, we are looking for a reversal to the downside. Any break, any reversal to the downside in this market going into next week is going to be a great opportunity to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at 34.35. And if you want to take a more conservative target, as always, you can look to the previous lows down here, roughly at the 36 level in crude oil for next week. So next market we're going to look at is euro dollar. Now, last week we started the week in this area, and we're looking for a move towards the 1.19190 for an opportunity to short this market to the downside. We did have a nice sell-off, and we started to correct towards the end of the week back towards this key area of resistance at the 1.19190. So very simply put, going to this week, we are still looking for further declines as the overall likely play in euro dollar next week. What we'd like to see, therefore, is as we've already started to pull back, any continued pullback towards the 1.19190 next week is going to be viewed once again as an opportunity to look for short setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set with 1.1659. The next market we're going to look at is pound dollar. Now, last week we started the week in this area right here, and we were looking for a correction in pound dollar before further declines to the downside to the 1.2667. Because we didn't really have much volatility in the dollar last week, we had the correction, but we did not have the sell-off. So very simply put, going to this week, we are now looking for short positions in pound dollar to the downside. What we would like to see is any further correction is simply going to be viewed as an opportunity to short this market at a better price. If we can start to break to the downside, any breakout to the downside here is going to be a great opportunity next week to start to look for bearish setups in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 1.2667. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside and target 2, the 1.2531. The next market we're going to look at is US dollar Japanese yen. Now, this was actually the US dollar Japanese yen chart from last week. We started the week right here, and we hadn't really moved anywhere in the US dollar yen for a couple of weeks, and this was a really nice trade from last week. We were just hugging the 106.270, and we were looking for a sell-off down towards the 104.70, and you can see pretty much this was the entire move last week. We ended up stopping around this target. So US dollar yen was a really good one from last week, and I hope a number of you got something from that. So very simply put, we are still focused on short positions in this market going into this week. Any correction in this market is simply going to be viewed as an opportunity next week to look for bearish setups once again in this market. And we're going to be looking at initiating shorts down towards the next key of support to the downside of the target set at the 103.56. And if we can get a break through here, we're going to be looking down towards the next key area of support to the downside and target 2 at the 102.58. So the next market we're going to look at is Aussie dollar. Now in previous videos we highlighted 0.71970 as an area to look for a bounce and long positions to the upside in Aussie dollar. We are looking up to the previous high over here as a conservative target and then on to the 0.74750. However, we've really just been grinding to the upside. Although we have been moving up, we've been grinding to the upside in this market because of a lack of volatility in the dollar. So very simply put, going into this week, we do still favor long positions in this market as the uptrend is still intact. Any continued pullback towards the 0.71970 is simply going to be viewed next week as an opportunity to look for bullish breakouts. And we are once again going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set, the 0.7475. And just remember, you can look to the highs over here roughly at the 0.7420 as a more conservative target if you wish going into next week in the Aussie dollar. So the next market we're going to look at is New Zealand dollar. Now last week we started the week in this area and we were looking for a rally we rallied into the high over here and we stopped just short of the target at 0.68250 and we started to pull back towards the end of the week. So for anybody not involved in any long positions in New Zealand dollar, what we would like to see, as we are coming quite close to the target now, is any deeper correction in this market is going to be viewed as a great opportunity next week to once again look for long positions. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set, the 0.6825. And if we can get a break through here, we're going to be looking up towards the next key area of resistance to the upside and target 2 at the 0.6872. So the next market we're going to look at is US dollar Swiss franc. Now in previous videos we highlighted the 0.91970 as a target and we bounced from this level almost to the pip, but we started to pull back. And last week we highlighted the 0.90530 as an area to start to look once again for long opportunities in US dollar Swiss franc. We have bounced at the 0.90530 and we are looking for moves back into the 0.91970. A break of this area will, as we highlighted last week, be a confirmation of this inverse head and shoulders pattern. This would be a confirmed break to the upside in US dollar franc. So very simply put, for anybody not involved in long positions in this market already, any pullback towards 0.90530 next week is going to be viewed once again as an opportunity to look for long positions. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set at the 0.9197. So the next market we're going to look at is US dollar CAD. Now last week we pretty much went nowhere. We started the week here and we finished the week here. So this was pretty much a non-event last week. There was no real opportunity in US dollar CAD. Going into this week we are still structured to the upside in US dollar CAD, and with that sell-off in crude oil, especially if we're going to get a turn this week to the downside in crude oil, this would favor US dollar CAD to the upside. Any pullback towards the 1.30950 therefore is still viewed going into next week as a great opportunity to look for a reversal to the upside, a breakout to the upside in this market. And if we do start to break to the upside in this market, we're going to be looking at initiating longs up towards the next key area of resistance, the upside in the target set, with a 1.3329. And last but not least, we have gold. Now, gold is still structured to the upside and we do favor long positions in this market. Just bear in mind what we've said over the last 2 weeks in the videos is that gold may not be the best place to put money just yet in the short term because we are in this extended correction, and anybody who had gone long in gold for the last 2 weeks really wouldn't have got much from this because we've just moved sideways. This may continue into next week, and I would really prefer personally to put more into gold to the upside if we start to see some volatility coming in, and after that initial break first, that initial momentum leg is what would convince me to really get involved in gold in the short term once again. However, we are still looking for gold to the upside, and any pullback in this area towards the 189877 is simply viewed as an opportunity to look for breakouts to the upside. And we're going to be looking at initiating longs up towards the next key of resistance to the upside in the target set, the 2014.32. So just bear in mind, this is what we are looking at technically in gold. However, there may be better places, as I've said for the last 2 weeks, to allocate capital than in gold if this is just going to continue to move sideways for perhaps even another week or two. So just something to bear in mind when you're trading next week. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing, and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. I want to wish you all a nice weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.